All right, everyone, welcome. Let's do a little breakdown over here of what basically played out today. So, so we'll start off with pre-London session, obviously. So pre-London was this move down that happened. Let me zoom in here a little bit. So basically, what was going on is obviously we came down. We had a little bit of a move where price continued to push down right over here. We moved down, and then we basically there was a support here to the left hand side, and the whole idea was, excuse me, the whole idea was that if we can create a support, and if we could break above this high, then there's a possibility that we can continue pushing up in this range, right? But also, if you took a buy, I mean, this looked good. It's a very good opportunity for price to move up. Even if you took a buy as soon as this candle started and you took a loss, basically you had to manage your risk. Now let's take a look on the 15 minute if there was a way to manage risk or not. Looking at the 15-minute time frame, obviously there was no way to manage risk. And now when I take a look at the 15-minute time frame, for those people who took buys based off of the 30-minute, if you took buys based off the 30-minute here because this candle closed bullish, let's take a look at the 15-minute that closed this 30-minute candle. So if you look on the 15-minute that closed this 30-minute candle, we can see the 15-minute candle closed a weak. Well, no, hold on. So, okay, yeah. So this closed a weak bullish candle. And the next candle continued to push down, right? A weak bullish candle. So when you 15-minute candle is a weak bullish candle, you want like a stronger candle to kind of say that, okay, 15-minute candle is closing strong bullish. So maybe the next one can continue to move up, which in turn can move the entire 30-minute candle up, right? But that didn't happen. Price went down. And but like when I was looking at this trade, I missed this trade. I missed this trade. And then, if you were present at pre-London, you would notice that price immediately went right back up. So this move up was about a 50 pip move up. 50 pip. This is not normal. This 50 pip move is not normal at all, right? So once this candle closed, this also closed at the 30-minute candle. And let me bring up the chart here to the left-hand side. And let me do this so I can do side-by-side comparison of the 15-minute and the 30-minute. Okay, so this is where we got gold. Gold 1 hour time frame. Let's go towards the 30-minute time frame. Okay, so we're going to keep an eye on this 30-minute candle right over here. So let me draw this zone here as well. Boom, boom, boom. And boom. Perfect, right? Awesome. Now, once this 15-minute candle closed, it closed the 30-minute candle, which looks like this, a rejection candle right over here. Now, once we have this rejection, now if you're only looking at the 30-minute, you're going to look at this and say that, okay, well, the 30-minute candle closed below support, okay, fine. But this wick right over here is 48 pip wick, and the body is 26, right? So almost double. Now, this becomes an exhaustion candle. Now, we don't know whether the next 30-minute candle is going to fill the wick or not. We just don't know that, right? So taking a sell here, anticipating wick fill, it's risky. So what do? We went down to a small time frame since this is like a big range over here. We waited for the 15-minute candle to close. So once the 15-minute candle closed bearish, and now we have a potential wick fail here, which is 23 pips. And then we have a support form, which is like 33 pips away. So maybe now there's a high probability for price to move down. Now, mind you, this 15-minute candle, let's measure this wick right over here. This wick is about, 24 pips. And the body is about, 15, 16 pips right over here. So this is also an exhaustion candle. But once this 15-minute candle closed bearish, the first 15-minute candle of the 30-minute, then you can say that, okay, wait a minute. If the 15-minute candle is closing bearish right over here, and we broke below the support, and we're creating a resistance, what's the probability the next candle will fill the wick on the 15-minute? Right? And if we do fill the wick on the 15-minute with this next 15-minute candle, maybe the full 30-minute candle will finish bearish as well, eventually filling the entire wick. So the sell I took wasn't the entire candle of the 30-minute. This was basically the entire 15-minute candle as it started to rock and roll on its way down. Make sense? So you're looking at the 15-minute, you're looking at the 30-minute, and you're kind of breaking down the candles, how they're forming, how they're closing, what probability there is, because if we're only looking at the 30-minute here with this exhaustion and we're anticipating the next one to, like, let's say if we have a situation like this, and you ask yourself, well, what's the probability the next candle will move back up because this is an exhaustion? Well, there's a high probability. But if you look on the 15-minute candle right over here, and if we take a look at this like this, we're like, okay, what's the probability it's going to fill the wick rather than moving back up because this was support. Now we create resistance, we have downtrend, we have pre-London volume. Well, I guess there's a high probability we can fill the wick. And then that's exactly what happened. And that was the trade which we took and price moved down. Right? Makes sense? So we're combining the 30-minute and the 15-minute, and then we're making a decision based on that. Okay, now, after that, what happened was, let's move on to the 30-minute. So price went up. We basically went back up in the range. And as we went back up in the range, price started to, there was a big candle, and then we started to consolidate a little bit. Now, the problem happened was, this was the problem. The problem, I'm not going to say a problem, but I think it may be some sort of a learning lesson over here, right? So the issue is, we had a resistance right here to the left-hand side, and above this resistance, we had another resistance right up over here. Okay, we had another resistance around 23.34. Now, what you need to understand is that whenever you have a resistance, and beyond that resistance, you have a clean range, that becomes a strong resistance, right? Now, this resistance right over here, above this resistance, there's a clean range, but it's only 29-30 pips. But if you take a look at this resistance, above this, now, regardless of the fact whether price goes in the clean range or not, regardless of all of that, if we take a look at the area above this resistance, we have a clean range of 100 plus pips. So this is a strong resistance, right? That's a strong resistance because on the left-hand side, you have a cleaner range for price to move. But above this resistance, there isn't that much of a clean range. It's small, so it becomes a minor resistance. So now, if we're looking at zones on the 30-minute, let's take a look at this right here, right? So this was our previous resistance. Price broke up, went up, and then we basically came down. So then this becomes our resistance on a 30-minute time frame. And then, we have our support forming right over here. So now we have some sort of a support form. Now, I know some people took sells when you had the candle closing like this with little to no wick at the bottom. Now, you got to understand this one thing. The candle closed with no wick at the bottom. It's a 50-50 chance, right? And this candle also has an exhaustion wick. So, it's like a block. It's like a block right over here. So taking a sell is difficult. Another reason why is because there are wicks here to the left-hand side. So let me drop down to the 15-minute time frame and kind of explain that to you guys in more detail, because I think this was the candle. Yeah, this is the 15-minute candle right here that closed with little to no wicks. And this is the 30-minute that closed right over here. So see on the 15-minute, you see all these wicks here to the left-hand side. These are rejection wicks, okay? So let me remove the zone here as well. So, so this is what the zone is that we're looking at, right? Perfect. So these are basically rejection wicks. So now ask yourself, is it better to take a sell after this candle is closing? Or is it better to take a sell after we break below these wicks for price to continue pushing down in this clean range? Once you know the answer, then you're going to understand exactly why. And I'm not going to tell you because all you guys are very, very smart to understand that, right? So on the 30-minute, this was the wick right over here. And I think breaking below this area would have made a better decision for price to move down. But that didn't happen. Candle also closed with no wick, so whatever. Now, next candle closed extremely bullish on the 30-minute time frame. Let's take a look on the 15-minute. Let's move. This is where we are. And then this is where we are right over here. Now let's copy the zone right over here because we got the 30-minute zone at that point as well, right? So this is where we closed right here on the 30-minute. Now, is this a buy opportunity at this point? Because this is where we're slowly coming into pre-New York session. If you look at the time, you look at the time at the bottom, this is 1:30, 1, 2, 3, 4, like around, like, pre-New York session, right? The 30-minute candle closed like this, still below this zone. We're consolidating. We have this minor zone, and then we have a bigger zone up over there. The next candle closed with a smaller body, right? So now if we break this down onto 15-minute time frame, this is what you're going to see. So these two 15-minute candles, this one right over here and this one right over here, we created the 30-minute candle, which looked like a small body. Now, when you have small body candles forming, small body candles basically mean that the volume going up in this case is dying. Unless the next candle breaks above the high, then there's a high probability for price to continue pushing up. Right? Now, if we only look on the 15-minute time frame, does this make sense here? That if this is our resistance and the 15-minute candle is closing above this area, we've been consolidating after after London Open, we've been consolidating, like, look, this was London Open right over here, and then we start to consolidate. We consolidate all through London, and now we're coming in pre-New York. And as we're coming in pre-New York, you can ask yourself a question that if we are breaking above this resistance, okay, what's the probability that price will continue pushing up with volume, right? And this push up would break through this minor zone here to the left-hand side as well. And then we'll move into the higher zone, well, the stronger zone, which was, right over here. Right here. Well, not into it, but still, like, close enough. Now, let's go back to the 30-minute time frame. Now, when the candle is closing with a small body, and this only relates to impulse entries, right? Now, normally the next candle will respect this high and not break this high and kind of come down because the volume is down. But if the next candle breaks the high of a smaller candle, this means there's a high probability that the candle make a higher high respecting the higher low that is created, which means the body of the candle is going to be bigger. And that's where that second trade basically went in, right over here. As it broke above the high, I saw price going up towards 23.33. I wanted to secure there, but then, the price retraced so fast that I just secured where I could, and that was about it. Right? So going back to the point, whenever you have a candle that's closing with a smaller body candles meaning the volume is dying. If the volume is dying, the next candle should respect this high and do not break this high to come down. But if we have volume, if there's momentum in the market and we're breaking above the high, this means there's a high probability we're going to continue pushing up with volume and momentum. That's what happens basically, right? And then, looking at the 15-minute time frame, this was a sell we looked at during the New York session where price broke below its lows. Some people took the sells over here. Some people took the sells below the low at this point. And but overall, price just kind of if you're looking at the high time frame, it made sense that it moved up. But, based on small time, 15-minute time frame, it got pretty messy at this point. So I hope this breakdown helped about the WickFill and about this little issue we had when the candle body was smaller for price to move up when it comes towards impulse entries. It's very important to take notes. It's very important to go over the price action that happened so that you are well informed when these things happen again. Take care.